Example of shifting value. This is the whole bit about what's the market doing and how well is it doing it. This is the market doing a reasonably good job. What it's doing here in number one, value shifts, and I'm concentrating on volume value area. So the purple on each of these, that's where 70% of the volume has been done. Value is distinctly below the previous day. And again, value is lower. And again, in number three, value is lower. This is a pretty solid move down. This is one that you can be confident in. This is one that you should be looking at thinking, yep, I'm quite happy to continue to sell this. Number four starts to get a bit of overlap, and 5 is completely overlapping as well. So this now suggests that the move is stagnating, maturing, whatever language you want to use around it. It's essentially got a bit tired now. It doesn't mean it can't keep going, but it needs something new. Essentially, everybody who wanted to be short has now done their business. You're struggling to find new sellers at the moment. So you've now got a situation where this could change. It doesn't mean it has to, but you're going to be very aware that any indication of a change here, you can be a little bit more confident to take on. What you've then got in number 6 is value is slightly lower. But what's significant about this? And this is where there's an element of interpretation. The majority of value is actually inside of this area of low volume, and so really hasn't moved a great deal. The other part of this as well is that you've traded much lower to create this big area of no volume or light volume, and then closed much higher. So from a candlestick perspective, this is quite a clear rejection candle, and it's a rejection candle with value shifted towards the upper side of it. This would be the type of candle I'd be looking at thinking, if this now starts to tick up above previous day's high or this day's high, this day's VPOC, I would then look for the reversal back, as all of these people who've been short, had the chance. And this is often the thing to think about. If you were short, and this was mentioned different time frames, if you're short in all of this, you see it then accelerate to the downside, you think, yes, this is good. This is the next leg of the move. And it comes straight back in your face and sits up here. You're then going to be far more keen to give this up. You've been given a pretty good clue that this may not be going down now. It's probably time to give it up if it starts to tick up through these highs. And that's what can create that sort of quick counter movement. Good example of this in gold, and I'll show you the chart on this one in a moment. What you've got here is a market that has gone from 3 days of balance, albeit quite wide ranges, but generally value is establishing around about the same area. Then you get a day, smaller range, but value distinctly lower, and same again the next day. So this is now starting to tip value lower, even though these are far smaller ranges, and you might look at them and think, well, it's a little bit less significant. The significance here is that it actually has started to drop value. This then means that if you do start to get a more aggressive acceleration, and you can see that from the light volume here and little time spent there, that's a good indication of clear direction. So now you can be quite happy to continue to play to the downside with the expectation that at some point you're going to get this bigger range expansion, which is what you get. The problem with that range expansion though, a bit like the pound one that we looked at a few minutes ago, is that on the back of it, value has stayed, VPOC wise at least, stayed up there. So the most volume has stayed very, very high. Value itself has shifted lower, but not in a major way. So for this to have any chance of continuing towards the downside, we need some degree of acceptance, which it does do the next day. Now the thing with acceptance like that suggests an evenness of buyers and sellers, particularly as it closes bang in the middle at the VPOC. So this is balanced now. It doesn't mean that it must continue. I'd actually be leaning on the idea of it continuing, but I would come into this day with the view that whichever way it comes out of value, if it comes out to the upside, we're going back up here. If it comes out to the downside, the move continues to whatever levels I've got lower down. That's the way that I'm going to be trying to interpret that. Once it does shift back up, now you're into the realms or into the view of thinking, right, well, it's tried to go down. It had the chance, it accumulated positioning down here, it didn't work, it got driven up, and now we can start to balance up here, and that would shift my view very much towards the upside now. I'll show you that on a chart, and this is what then happens. These were the 2 days of value shift. Now what you have got here is this quite steady grind all the way up, and that would be part of the other reason for thinking, yeah, there's a good bit of scope towards the downside in this one. And then this is the day that sells off and doesn't really shift value, and then this is that balanced day. Like I say, if you were looking at that coming into this day, the next day, so the next day starts here, I'd be looking at that thinking, brilliant. If this goes and breaks the low here and here, we can go down to there and to there, all the way through the beginning of that move. So, yeah, it doesn't mean it has to go reverse. You know, this instance, it actually reversed, but I would view this as very much an opportunity in either direction. The day after this, whatever happens here, you could be going that way or you could do that, as it did, because the fact that it is now balanced value out is effectively, I sort of view the market as moving to a neutral stance. It's got directional, it's shown direction, it's now become neutral. Where does it go next?